The following is my conversation with Raymund Bareuther and Cristobal Perez. We recorded this episode to dive into the situation around YT, who recently entered self-administration. These two experts, Raymond is an M&A expert, and Cristobal was the managing director and has worked extensively in the bike industry on the managerial level in Europe. We aim to dive into the situation and kind of the reasons behind what happened and then kind of what is going to happen next. So this should give you an idea of shed a little more light on this situation, this really surprising situation for YT that up until now was a gem in the D2C space. Have a listen and you can get some insight into this developing situation. So Raymond, thank you so much for coming on. I was suggested to reach out to you by a friend of mine in the business. So it turns out you've got a lot of experience with regards to M&A, and you've done some projects and some deals in the cycling industry. So I really appreciate you coming on today to speak a little bit about the situation and the developments with the YT brand. So again, maybe you just want to tell us a little bit about who you are and your background a little bit, and then we can jump into the topic that we had discussed.
Sure, great to be here. Thank you very much. I've got my coffee ready, so let's do this. My name is Raymund Bareuther. I'm German, originally from a small city near Würzburg, which some of you might know as Dirk Nowitzki's hometown. That's in Franconia, a really beautiful part in Germany, and we can come back to that later if it's relevant, especially since today's topic is also connected to that region. And about 10 years ago, then I moved to Zurich, Switzerland, and it's really the place that shaped me the most professionally. Going a little bit back, however, my background, I actually started in competitive rowing, which was a big passion of mine before I moved into the M&A investment banking industry. I kicked off my career back in 2013 in Frankfurt, working in large cap investment banking. And over the years, I worked for BNP Paribas, UBS, and GSA Altium. And now, kind of amusingly, since we do M&A for living, we ended up being part of a deal ourselves as Julian Loke acquired us back in November 2021. That was a great experience. I learned a ton from some fantastic people, and it was around then that I started focusing also on active lifestyle and bike transactions at that time.
Can you
And at
tell
some point,
people, the
sorry.
uninitiated, what M&A is, and just for like very in the simplest terms, what you do as an M&A advisor in the M&A business?
Yes, I mean, clearly at that time, we learned that we really, especially when it comes to founder-owned business, that we really listen to the founders and that we always try to find the best solutions for the founders.
So, but when we're talking about mergers and acquisitions, that means that you are on behalf of potential clients or investment funds that you're doing potential like more mergers, more acquisitions, a little bit of both. Like what exactly have been the sort of deals that you've worked on?
That's absolutely right. So most of the time, the business is sell side related. So we're getting mandated by a company, a founder, or a CEO. So by the majority owners. And then we try to find either a strategic buyer or an investor in their favor for the next stage of growth.
So from
Having
the
said
sell
that,
side, that means you'll be working with entrepreneurs that are saying, "Hey, maybe I want to retire. Or I'm looking to, to a different stage in life." That's typically what happens.
absolutely. So founders, entrepreneurs who want to, or you could have several options, right? There could be entrepreneurs who want to retire. That's one option. The second option is that they want to shift some risk, right? If they sell a majority but still own a minority, that means they shift some risk. And also some who want to cash out. So you have various scenarios. However, for the company, that normally means that there's a new stage of growth coming up in the best case.
So typically, this is companies that are going to either change hands or, like you said, maybe the entrepreneurs or the owners want to reduce the amount of risk that they have. So maybe they keep putting their own money into the business and they're like, "Hey, hold on a second. Like, I need some help here. If I want to take it to the next level, I need a little bit more cash and I can't do that on my own." Is that also a scenario that you see?
That's absolutely right. So we see different scenarios. The smaller the company is, the more the founders want at a certain point of time, A, cash out a certain amount, or B, want to prepare the company for the next phase of growth and therefore also shift a little bit of risk, as normally they're normally fully exposed 100%
Sure.
to the company. And therefore, these are the main reasons.
Right, right. Well, I guess in terms of the situation, thanks for going over that. That's really, really nice. Some of our, the listeners are completely focused on the cycling industry, so maybe with M&A, they don't have quite as much experience.
Can
Um,
understand.
so I think as far as that goes, I think I have an idea of what you do. So looking at what happened with YT, I know YT had an acquisition event a few years back where Markus Flossman, the owner, sold some of the shares in his company. And I presume that at that point, that situation was like you mentioned, maybe he wanted to take the company to the next level and he wanted to take some of the risk off the table. So that's what happened. You were also part of that deal. Is that correct?
That's correct. Yes, I was advising at that time Markus Flossman and White Industries.
Okay. And so I guess now, completely unrelated to that deal, the company has decided to now step back and I guess not the company, but the owners, what it sounds like from the information that we have off the internet, no inside information, is that they have decided to go into self-administration and then will restructure. Or can you explain a little bit about like kind of decipher what happened on the internet and what we've read from your experience, kind of seeing it from the outside? Can you explain what is happening?
Sure, it's a quite complex topic to say that because on the one hand is you need to look why YT industries end up in restructuring. This is the one view. And then of course happy to explain a little bit more what this self-administration topic means for YT. So but going back, why YT ended up in this restructuring case, it's quite interesting to see because YT's industry's current situation is really a reflection of the broader challenges facing the whole bike industry right now, right? If we look back at the COVID-19 pandemic created a historic boom in cycling. The demand skyrocketed and brands like YT, which operate on a D2C, so a direct to consumer model, were able to capitalize on the surge. However, as the pandemic eased, we saw a sharp normalization in demand. So many companies, including also YT Industries, had ramped up production and built up significant inventory, expecting the growth to continue. And then what happened instead was a classic case of overstock. Also, because supply chain is not comparable to the automotive industry where it was fully digitalized. So the inventory is basically a backlog and overstock. So as the demand softened, the market became saturated with bikes and brands were forced into aggressive discounting
Discounting.
just to move inventory. I
Right.
think this is really important to understand. Um, Also, and this is also maybe a little bit more, I have the feeling YT related, even those with less inventory had to offer their brand new bikes at discounted prices to
That's
stay
interesting.
competitive.
That's interesting. I think I had heard that too, that just because they maybe didn't have inventory problems, which some of my contacts that I have had mentioned that they didn't have inventory problems, but because of the aggressive discounting that was happening to brands that did have inventory problems, they were forced to discount. And from my perspective, tell me if this is correct or not, but from my perspective, a D2C brand with pressure to discount basically means that all of the pressure and all of the margin compression is focused directly on the company themselves. Whereas with a company that has a distributed sales network, perhaps some of that compression can be kind of softened across the whole network. Is that something that you agree with?
Yeah, 100%. So what we saw then in the German press or a lot of times wrote about brutaler Rabattkrieg, which means brutal price war. And you rightly said, like for D2C brands like YT, which don't have the buffer of retail partners, this was especially painful because the margins were squeezed to the point where profitability became unsustainable.
Right. And so I guess looking at that, I think we've looked at the whole situation where sure, maybe they did manage their inventory well, but margin compression happened because of the price war. So margin compression happens, margins are drying up, and so they don't have enough cash. They're not generating enough cash, presumably, to maintain payroll and finance new season of bikes and finance inventory, which is a huge, huge responsibility in terms of like a huge financial burden for brands because they have to kind of supply all this cash to buy the new inventory, to have it produced in the Far East, and then have it brought over before they can actually realize the sales. So from what we're saying, it sounds like all this margin compression led to a lack of cash flow. And so we're assuming the owners said, look, we can't keep financing this.
Yeah, so you rightly said, like on top you have at the moment also a weak consumer sentiment, right? Which also doesn't help in this situation. So that means like the move to enter a restructuring process is in many ways a necessary step to address these structural issues of the industry and then of course of YT's situation itself. And then, I mean, coming back to to what happened now. I mean, the Sanierungsverfahren in Eigenverwaltung, as you name it in German, is a unique feature of German insolvency law. So it's essentially a self-administrated restructuring process, somewhat comparable, I think Chapter 11 in the US, you call it, with some important differences. First, the key point is that the existing management team remains in control of day-to-day operations, but they are now working under the supervision of court-appointed restructuring expert known as a Sachverwalter. So I think that's very important that they still stay independent. And that means for YT now they have a window of opportunity to stabilize the whole business without the immediate threat of creditor actions. So the good thing is they can now renegotiate contracts, restructure debt, and implement operational changes that might have been difficult under normal circumstances. So, of course, the question is probably why Ardian, who is the owner of YT Industry or the majority owner of YT Industry, does not provide more support, right? As you could suppose.
Right.
This question comes up often in these situations. Ardian, as you know, is a highly respected private equity firm and became the majority owner back in 2021. And private equity investors are generally very hands-on and supportive, especially when they see there's a clear path to value creation. However, like as we learned now, the current environment is extraordinary, right?
Sure.
So the entire bike industry is under pressure, not just YT. And also recent bike industry reports point out that many investors are now taking a wait and see approach given the scale of the downturn, I would say.
Sure.
So
So the ownership strategically made this decision because they feel like this is the best. We're assuming that in their regard, this is the best outcome that they could make with the cards that were dealt to them currently.
yeah, I mean, it seems like for them that the decision was influenced by risk and return considerations, right?
Sure, always.
So, because the market is flooded with discounted bikes, margins are historically low, and there's no clear sign of quick recovery, putting in additional capital would have been a risk move. And also, it would need to be justified by their limited partners, right?
Sure,
So
sure.
instead, by supporting a formal
Administration.
restructuring
Yeah.
process, Ardian now is helping to preserve the core value of the business while limiting further exposure.
Sure. No, that's you described it, I think, perfectly. Based on your experience and kind of based on your knowledge of this situation, what do you think will happen to the debt in this type of a situation?
Well, that's an interesting question, and there is no clear answer on that. One common tool is the debt haircut, so-called in German Schuldenschnitt, where creditors agree to waive part of their claims to enable the company's survival. So let me quickly explain that so that everyone really can understand it. So it's a common tool where creditors agree to forgive a portion of their claims. This, on the one hand, reduces the company's debt burden and makes it more likely to survive post-restructuring, and also for the creditors at least to get some money back midterm, long term. So the goal is to stabilize the business and preserve as much value as possible but it often involves also very tough decisions like layoffs or renegotiating supplier terms or selling assets. So the process is basically designed to give the company a realistic chance to recover, but it's not a guarantee. And besides this so-called debt haircut, restructuring can also include extending payment terms, converting debt into equity, so-called debt to equity swap, or rescheduling interest and principal payments. And last but not least, it also can mean that the orderly sale of non-core assets with proceeds used to pay down then the debt. So in my opinion, these are the options, what can happen with the existing debt.
It sounds like in this situation, the idea is to put YT in a situation where it can survive, pay everybody back, or at least pay part of what it owes back, and continue to generate value because I think everybody agrees that YT is a valuable company.
Absolutely. So YT is a great company, and at the moment it's the survival mode, and these options would help YT to survive mid and also hopefully long term
Okay.
and get restructured.
And then I guess in terms of the ownership, what do you think would happen in a situation like this to the ownership? Would they lose their ownership stake? What typically happens in this type of a situation?
That's a fair question, and the answer is a bit more complex, to be honest, than it might seem. And just to be clear, I don't have any insights about the current detailed financial situation, which obviously has an impact on the ownership and how it proceeds. So Ardian, as the current majority shareholder, is not necessarily in the driver's seat doing an insolvency in self-administration, just to be clear here. In these situations, the process is led by the management and overseen by the court and the Sachverwalter. So the outcome can be either a share deal, where a new investor takes over the company by buying shares, often in that case for a symbolic price like €1, and assuming the debt, or it could be an asset deal where the assets are sold to a new entity, often leaving the old company and its existing shareholders behind. And in all cases, Ardian's influence is honestly limited, also in the debt restructuring case. And they may lose their stake entirely, especially if the restructuring requires the significant debt haircut. We remember the Schuldenschnitt, or if a new investor steps in.
Okay, so it's not clear what's going to happen. There's a few different opportunities or possible scenarios. So I guess we'll see. We may see, but being a private company, we may not know, right? I mean, this is all stuff that we may, like the public may never know because it's a private company.
Yeah, it's a private company. As explained, they have several options. Important is to understand that in this current situation, the management, together with the court and the Sachverwalter, is in charge, not the current majority owner. This is very important, and they have now various options for a couple of months to restructure the company and hopefully bring it back on to running.
How long do you think, in your experience, would something like this take before the new structure and the new investors and the new, just kind of ballpark? Like, are we talking months, years? What are we thinking?
Now, for years, there is no time. So this
Needs to be
restructure
fast.
needs to be fast. I expect that they have time less than 6 months.
Okay.
So let's say in general, 6 to maximum 1 year. But yeah, as I don't know their financial liquidity situation, but as we heard from the video, also they are quite distressed at the moment. So they need to find a solution.
Normalcy.
And
Yeah, quickly.
yeah, I hope they find an investor who is willing to take this on.
Yeah, absolutely. You've basically answered all my questions, Raymond. This was like super concise, super fast. What are you doing now? You said you have this company. It's called Everstride. Do you want to tell us a little bit about that?
Yeah, happy to sum up here and to conclude. So at some point in 2024, basically last year, it made sense for me and two other colleagues to start Everstride Partners here in Zurich, an M&A boutique focused on smaller and lower mid-market deals. And because we see a lot of potential in helping founders and CEOs to grow their companies in that space. And we support these companies in the M&A journey. Could be sell side, as we talked previously about it, could be buy side, but also mergers, and in particular cases, also fundraisers.
And you said small and mid-market companies. I presume it's European based. Any sort of specific categories, industries, or sectors that you guys are trying to focus on?
Well, as we are a smaller M&A boutique, we are, of course, sector agnostic. However, we have particular fields of expertise. So my partner focuses mainly on software and technology, while myself, I focus on active lifestyle, sport transactions, and consumer health.
Okay. Well, I appreciate you coming on today. This was cool. Like you were very precise, and I think you gave a really nice expert view on what's happening. So I really appreciate the time. If people are interested in potentially deals, mergers, those types of things, where can people reach you?
Well, they can go on our webpage. It's everstride.ch, and there they found our contact formula and email addresses. Otherwise, happy to see the requests on LinkedIn as well.
Okay. Well, thank you, Raymond. This was really fun, and I appreciate you coming on today.
Thank you very much, and I wish IT industries for the future all the best.
Yes. So, Cristobal Perez, thank you so much for coming on today. I've seen, in the industry, I've got some friends that I think we have a friend in common in Cash Monday. He had mentioned that he knows you well. And so I guess we've never had a chance to really connect, one-on-one, but I'm glad we got the opportunity because having seen your sort of authority in the business, I wanted to reach out and get kind of your take on this YT situation. Unfortunately, YT has entered administration here. Today's Friday. I think it was Wednesday when the news dropped, Tuesday or Wednesday. So, yeah, I guess thank you for coming on. You want to just tell people a little bit about who you are so they can understand kind of your background in the industry?
Okay, well, at first, thank you for having me here. Of course, as you said, we have pretty good friends in common, like Catch Money or Simon Cox, who was the one who put us in contact, in touch. And okay, I would say that I am a man with adaptable profile. I've been working for the fashion industry, later on for the motorcycle industry. And for the last 20 some years, I've been involved in the bike industry. I was lucky, I would say, to say, I would like to say, I was lucky enough to be able to merge passion and work. So that's why I jumped from the fashion industry to the motorcycles. And when I became a cyclist back in the 20th century, I decided to jump into the bike industry. And I've been working for companies, relevant companies, like Shimano distributor in Spain for 5 years as the chief marketing officer. I also worked for Axel Group as a country manager for Spain and Portugal. Okay, and then I tried to keep myself updated and let's say it, promote myself on LinkedIn by posting valuable content for people like you, Wyatt.
Yeah, absolutely. I've seen you're very active on the channel, and I've seen your content, and I appreciate your takes on things. So, that was one of the reasons that when Simon mentioned your name, I said, yeah, absolutely.
Thank you, sir.
So, yeah, so let's jump into this. I think so. What we have seen, what we know is that YT has entered a self-administration process, which essentially means that the company is out of cash right now and that they won't be recapitalizing their current, we'll call it situation debts. So then what happens, if I understand correctly, I'm not in this business, I'm not on the finance side, but if I understand correctly, they will be then doing a sort of like a bankruptcy where the debts will be zeroed out, and then they'll be able to start again with the brand and the inventory and everything. And then I presume that there will be a new owner that will come in and will take over, or at least will inject some capital because they're going to definitely need some capital to start over again. So that is kind of where we're at today. When you heard this news, what did you think?
Okay, I would like to say that it's a bankruptcy. I would like to say that to put everything on hold, including payments and the financial obligations. No, yeah, of course they are fighting to be back on track by finding capital to be able to keep operations going on. And sadly, it's a quite routinary procedure that we've seen within the last years of companies not being able to cope with what they had in mind. And so they had to put everything on hold, and someone else takes control of the company so that they will be able to relaunch it. And I would say that the difference here is that YT did what others did, but in a different manner, which means that they have been water clear. And instead of keeping themselves silent or just releasing a statement with a lot of figures of financial jargon that no one understands, they decided to grab the bull by the horns. Is that the right word? No? Grab the bulls by the horns. And that's what they did. And as of now, they will have to rebuild their situation so that they can keep on making bicycles and then survive that situation. And I think that is quite common and quite sad to know about that situation.
Yeah, and I know that Markus, the founder, who I believe Markus he brought in the private equity firm because the company was owned by is currently owned by a private equity firm. I think Markus sold majority stake in the company,
Yeah.
the original founder, back in 21 or 22, and
yes.
and then he was the one then who was the CEO at the time. And he came out and he made a statement on YouTube, which you can go and see. It's about a 4-minute statement. And he, gave a really clear explanation about what happened. And in your opinion, you had mentioned this earlier, you had mentioned that you thought that was commendable in a sense that he put his face on there. He said, look, this is what happened. And so you think that in that regard could benefit them in the future in a sense that they were very transparent about it, and giving a more human aspect of it is something that you haven't seen in the past or you don't see very often.
No, you don't. No, I think that he was smart enough when he quit as a CEO of the company and offered the handling of the company to someone else. And when things went worse, he had to retake the reins of the company. So he's back on his CEO role again. This is something really remarkable. I mean, you are the man who creates a company. Someone comes, puts money for your company to become bigger, and you don't usually lend the keys of the company to someone else, but he did it. He was smart enough to consider that someone could come and do things in the right way. I wouldn't say better or worse. I mean, in the right way. It didn't happen. And now he's been brave enough to come back on his CEO role. And the difference is that he showed up on a video on YouTube with no artificial or no, how to say in English, is fireworks, not fireworks. I mean, something neat.
He was humble.
Yeah, neat, clean. And he showed up as he is. And he said things as he feels those things, and so that anyone else could understand what he's saying. Okay. And then this is something that brings confidence to all the stakeholders, the dealing network, users, employees, feasible investors, and so on. Does it mean that they will find out the way to solve the company? I don't know. This does not depend on his statement, but it is clear that it means a beneficial influence. What he did on the outlook, the possibilities of the company, since I think I would feel like this. I think that his team, investors, vendors, everyone else around the company knows what's going on clearly.
Sure. And
Okay, and this is
that's
important.
commendable. I think that's, yeah, in terms of with PR and with kind of crisis management, there's different ways to handle it.
So,
And you feel that this way was about as elegant as you could have handled it.
of course, but I mean, you can be elegant by sending or sharing a press release. This is human.
Human, sure. And
This
yeah,
is
and
human. And you
for
see
sure.
the face of Markus, who is struggling, who's been brave and bold enough to show up and say, okay, this is my situation. This is why we are here. And that's what we have ahead of us. We'll fight for it. I can't count on you. And then this is a powerful message for all of the
Yeah, no, you're right.
stakeholders. Right?
No one has done that. No one at Wiggle did that. No one at any other companies that have had struggles in the last number of years. So it's definitely
Number.
it's definitely unique. I have discussed it with some of my contacts, and what seems to have happened was that regardless of if their inventory situation was strong or not, everybody was discounting in the last 2 years. And so I presume that they had to discount as well. And when you discount, that basically erodes away your operating earnings, your earnings and your margin. And that's the fuel that fuels the company, right? For financing the new model years and financing your payroll. And so if there's discounting happening in a D2C company, all of that impact goes directly to you. Whereas in maybe like a distributed company that has dealers, the impact gets spread across, I presume, gets spread across the whole dealer network, the distributor network. So it's probably not as sharp of pain to the company. So that was one. It sounds like the discounting really hurt the cash flow and the earnings or in the margins for the brand. The other situation which brought a lot of uncertainty was the tariff situation, which Markus said in his video is a 50% of their business goes to the US. So that's a huge problem.
Yeah, huge part of his business.
And then the third one that I had heard was they launched a new bike with a Fazua motor, which had some product problems, which had some quality problems. So I guess between these three things, but again, like I don't know, man, this D2C model, it's over and over again. It's not seeming like really the best model in bicycles.
We see in Spain that fleas attack the weakest dog, things don't come along. You said it, you have financial problems, the discount erode their margins, their money to be able to keep the company open.
Operate, yeah.
Yeah, and I think first that it hits you, and it might be worse than if you're a distributor, with all the due respect. Because if you don't sell YT bicycles, you can sell any other brand or helmets or shoes or whatever. It does not mean that it's not a difficult situation for the distribution chain. It's been and it is a difficult situation for everyone. But if you depend on your own product and you depend on the distribution network, which is submitted to the circumstances, you don't have how to escape. You don't have how to run away. Maybe distributors or stores have other options, the workshop, selling different brands
sure.
or whatever.
Right.
But you don't have that option when you depend on your own product. And then also the situation, the United States of America, all of those tariffs and trade agreements and disagreements is driving us crazy. I think that politicians really don't pay attention to the consequences of what they do. And then we have to struggle with it. And our industry, which had just been through a hard time, it seemed that the the light of at the end of the tunnel was coming for a company depending on the North American market. It's a big hit for the company.
Sure.
It is a big hit for the company. And you mentioned a third variable. What did you say? You said discount, the trade agreements, and something else you mentioned.
I had heard that they launched a product with the manufacturer Fazua motor manufacturer, and that they had some quality issues.
Yeah, but I mean, this is something that happens to everyone. Companies have problems and will have problems always. Having a problem is not a problem. A problem becomes a problem when you don't know how to solve it. Quality issues or whatever, or shipment disruptions or whatever, this is going to happen no matter what. But you need to have the capability to solve it. And then, as I said before, all of the fleets go to the weakest dog. When you're in a weak situation, a difficult situation, everything goes or seems to go against you. If this problem with a new bicycle, which is normal, happens in a moment in which you are strong, you're in the plenitude of your strength, you can solve it. But if it catches you with a little money, with bigger problems on your mind, then it sums up.
Yeah, that sounds like you kind of summed it up really well there, Chris. I think there were the tariffs can happen, the quality issues can happen, discounting can happen, but apparently all three of them together was just too much.
Yeah, too much. And then this is what brought YT to the current situation. But right this week, we knew about Merida and we knew about Pon bikes. There are statements, there are releases were terrifying about their financial situation. But you read it, we all read them, and we are not discussing that. We are discussing how Markus faced the situation on behalf of YT. Okay, because they all have the same problem. All of the bike brands have the same problems. And we heard that week also about Axel, who is struggling like hell, and also about Meridian Specialized. And this is something you I wouldn't say forget, but it does not remain on your mind, or it does not create the buzz that this YT situation is creating.
Sure. Well, Chris, I really appreciate you providing some insight on this, and it was great to finally meet you. And if people want to reach you, where can they find you?
LinkedIn.
LinkedIn. Okay.
24/7.
Okay. Cristobal Perez.
LinkedIn. Cristobal Perez. LinkedIn.
Okay. Cristobal Perez.
Maybe you can place a link to my profile anywhere.
Yes, I will. Okay. Well, thank you so much, Chris. Have a nice weekend.
Same for you. Thank you for having me. My pleasure, my honor. Be well, bye.